everyone, this is Juan Sarmiento and today is Friday, January the 7th. As the first show of the year, I want to go through a couple of things. First of all, this is the account statement and we're going to place this one day from today. Okay, so it's current is what it means. We are seeing the data as of today. And you can see here that so far this year, 7 days, we have $905 profit. Okay, so how well did we do last year? All you need to do is go over here and say change the dates. That's all. So we are going to go to from January 1st 2021, just clearly change the date, obviously it starts on the 3rd, to the 31st, the last day of the year, 12/31st. Okay, and this way we would know exactly what we closed the year and which ones were our winners and our losers. Okay, so for the year we made $1,159. Okay, so not great by any means, but once in a while you get that kind of year, and I would say that this is as bad as it gets, and we essentially manipulated or operated our strategy to perfection, and we have many losers as well as many winners, but in balance we get ahead. And that sometimes we have to say, thank God I didn't lose any money. Okay, so that's how I see it. And ironically, we are very close to making that money already this year. So if we were to change that to today, let's say from the 7th of January last year to the 7th of January of this year, which is today, and that would change here my profit. Let's just reset here so we see 366 days. Okay, and let's reset that, and this is as of today, $990. Okay, so you can play around there and then you can see how well we've done overall. Remember that we started this account back, I believe it's 2017, with $50,000, and we have $93,000. At some point we got to $108,000, and last year was, well, the year before was great. Last year wasn't that good, and that usually happens. You have a very high volatility year, and then you're followed by a low volatility year, and that's when we can break even or lose a little money. In this case, we pretty much broke even. We made about $1,000. Okay, having said that, let's go and check our positions right now. We have 1 day back again, and let's click on the symbols, and we have Apple, Abbott, Conoco, etc. Let's go through them. So far this year, the big winner is ConocoPhillips. Okay, and you see that we have $1,447. Okay, let's see what's up with that. Let's look at the chart. And there you have it. It's a stock reaching new highs even as the market is showing quite a bit of weakness. So let's go to the Analyze tab and see what we have. Can we take our profits, or do we need to? Okay, so we are right here at $80 almost. Okay, and we have calls, 5 short calls, 5 long calls, 7 long calls, and we have 10 long puts. So when you see the price above what is the smiley face, obviously you need to adjust. Okay, we need to for sure adjust. So how are we going to do that? Well, you can sell 1 call. Let's just show our possibilities here. Analyze closing. Just sell 1 We can sell up to 2 because that would be our outstanding calls, and then we end up with 70. If we do 2 of them, then it neutralizes. We are essentially taking our profits and hoping that the stock goes down from here. Let's take a look at the chart. Do I believe that? It looks like it's very strong to the upside. Okay, so that's one alternative. Another alternative is to simply roll up the 65, 2 outstanding calls, 65 calls. All you have to do is calculate 7 minus 5, that's 2. So analyze rolling, and we're going to roll only 2. That means to close the existing January 25, 22 and buy something at a higher strike price. Let's say, in this case, 80 is the closest thing to the current market price. So we're going to do that, 80. And we're going to put it at the same expiration, January 21st. Okay. Deselect this single call sale. And if we did that, we end up with 43 deltas. Okay, and that will give us back almost $1,300. That's $1,298 times 100. Okay, close to $1,300. Okay, so you can do either one of the two. If we just sold one of the calls, leaves me with 39.53 deltas. If we do the rollover, it leaves me with 44. Okay, I think I want to do this one here. Is a better option. I think it gives me more money for one thing, and second, it reduces my delta further, doesn't it? Well, it's jumping around a little bit right now, from 162 to 69, and this one here goes to 71. Huh. Okay, so let's just sell one call here, and leaving one call that we can roll up that one. Okay, so now that is full, you see I have now 68. Now I'm going to roll up the one remaining call here, outstanding call, and that will neutralize my deltas even further, but it's still 25. Okay, 26, I like that. Okay, and let's put that to 90 and a little above the market and see if it will come to me. And let's do that, and we wait a little. Okay, so I'm rolling up that one left call to the 81. Okay, let's do the rest. That's the strong one, and we are just taking profits is what we're doing. If you want to look at it from here, you can see how much money we have invested once those rollovers are closed, and you see that our market value is reduced substantially. We have on that trade because we have taken quite a bit of money off the table. Okay, let's go alphabetically here to Apple first. Take a look at, it looks like Apple is, I would consider that a double top, which is very negative. Earnings are coming up, so we need to neutralize no matter what. Let's go to the Analyze tab, and it's already very neutral. And okay, that filled that COP. Okay, let's take a look at it. Since it filled out, and then we come back to the Apple trade, and you can see now that it's 23. That's perfect. Delta. If the stock collapses from here, wow, we have the open door to make money to the downside. Okay, let's go back to Apple then. And we have very neutralized delta. We have the January 14th. Those are expiration next week, and which means we will be tight next week. If you didn't do anything, the call may be assigned. Okay, so you need to be aware of that. That if you're going to let that go and wait until next week, the call can be assigned, the short call, which means you would end up with short options, and then your broker will not want that, so they would try to close that position for you if you're not available. Otherwise they will call you, in which case you can close the shares by selling this long call with it in a covered call closing. Okay, so you would buy a covered call, which means buy the shares and sell the call, in this case this one here, and that would neutralize my position. Okay, I don't think I need to do anything. We'll see what happens for next week, but in a real account you run the risk to be assigned, so you need to be aware of that, and your broker might call you. Okay, let's go to ABT, and that's Abbott, and we are in a good position because, as you can see, it looks like a straddle. We're in the middle and our deltas are negative, and the stock is very neutral here. Okay, and it's been going down, and you can take advantage of that by selling puts. Well, I'm more tempted to leave it alone. Okay, once again, this is January the 14th, and if we were in the middle of the cone here, then I would be concerned of rolling the trade for the week, for a week or two after, or 3 or 4 weeks. But you can see that we have January 14th and 21, so this position will be closed next week for sure. Okay, I'm gonna leave it alone. Let's move on to Home Depot. Okay, this hasn't been good, and you can see here that these expire today. Okay, so the call, we could simply sell one call that expires a month from now. I don't care to close that short call here because that will most certainly expire by the end of the day today. But a month from now, let's say February, we can short the 410 call, and now we have 2 open right now, but one will expire before the end of the day, at the end of the day today. So let's send that off. The put, you can't do that because the puts are in the money. Okay, this is the end of the trade, and as you can see here, it looks like you would have almost unlimited loss if the stock rallied, but because this option here expires today, what happens? It will disappear by the end of the day, and this is what the trade will look like then. Okay, so awfully bullish if you ask me. Okay, so no need to do anything with it. It will simply expire worthless. Okay, even if the stock goes to 410 by the end of the day. Okay, now let's do the put. The put you do need to roll over, so let's do that. Analyze rolling, and we do the same expiration, February the 4th for the new short. We are closing the one we have, short put, and we're selling one more, and that will give us $450 credit. And when it fills, then we end up with this put will disappear. We have the one here, and we have puts at 390, and call, we have 2 calls. Okay, it's pretty neutral. Let's see what happens then. What we should do really is go back, let's say 50 days or so, let's say 60 days, and see if this Home Depot has been a loser. We already have done profit-taking moves. To see what that effect was, you can simply copy all of these, analyze trade, and let's hide everything so we can see actually what our trade looks like after all those moves. Okay, so this is the trade, and it is a loser, so to speak, $243. Okay, so you might say, I don't want to lose any more money with this trade, so I'm simply going to close it, and that'll be fine. Okay, all right, let's move on to Oracle. And Oracle has been going down, and we have made money as it goes down. If you want, you can see again the same thing. You can go back enough days, let's say 90 days. But as you can see, we have done a lot of manipulations with this. If we had more days in the year, you could see what a longer term profit and loss on that. Let's go for 90 days here. Okay, not enough. 100 days. Here. So these, all the trades, and you can copy them all. Let's hide our positions, and then we can see exactly how much money have we done or made or lost with this trade, and all the moves we have made. Okay, so this is where we are. Looks strange though, that doesn't seem to be the trade we have. You know, it's completely different. Perhaps we have, no? Let's go to the monitor tab. And it shows here that from the moment we open to today, we have a loss of $112.50. And something is not quite right, because if I copied all of this correctly to the Analyze tab, it shouldn't look like this. It looks different. So I don't know what's going on here. I would have to figure this out. It's going to take me a long while to work this out. So I'm going to pass on that for now. But let's just concentrate on what we have in front of us. We have this January expiration. We can roll this over to January 21st. We can close the position. Let's close the position here. So we are going to analyze closing, double diagonal, and then adjust the number of contracts. The calls that we're going to sell are the January 7th, today. The calls, it doesn't matter. We're going to sell them anyway, buy them back for next to nothing, I'm presuming. 3 for the puts, and then 5 for the puts, and 7 for the calls. 7 calls and 5 puts. Let's see, 7 calls, 5 puts, 3 calls. No, of course this is upside down. 5 calls and 3 puts, and that gives us a straight line, and this is the value we're getting, and I'm gonna close that position. Right, we're just too close. Doing the rollover for one more week doesn't seem to make much sense, so I'm going to close that position. Okay, let's go to SPG, and we have 21st of January, and there's plenty of time for do anything with that, so I'm gonna leave it. TER, in this case, we have the 60 and the 70 calls, and again 21. I think that looks good. The delta is neutralized, and that's quite all right. If the market collapses, volatility will increase, and we could land in this area and make additional profits. So I'm going to leave it alone. Let's go to, and it's sort of going down. If you take a look at the chart, yeah, I think it's going to go here to the Ichimoku cloud. So I'm going to let it be. Then UPS is reaching new highs, so this is a bullish trade. And our deltas are positive. 3, next to nothing, but it's neutral in any case. And the January 28th is the expiration, so I'm going to let it be like that. Okay? I'm still looking for trades, but the market seems to be on the high volatility right now, so it's kind of hard to find anything interesting there. We would soon, companies will begin to report earnings, and perhaps we'll find some candidates then. Let's go to the trade tab, and you have the Dow Jones is down, the Nasdaq is down rather strongly, almost 200. The XPY is also down. Let's put the daily chart here for the SPY. Yes, going down. By next week it probably reverse and go up a little bit, and then perhaps then we can choose some candidates. The Nasdaq looks like it's falling below the Ichimoku cloud. We'll see. That's all for today. Thank you very much for joining me. Let me just make sure we have everything filled. Oh, we still have some working orders here. Okay, let's modify these options. We're getting rid of the Oracle position, so I'm going to unlock this and play along until we get a fill. Home Depot, and I'm gonna be working on this until the end of the day, until these positions get filled. So I'm going to make the adjustment until that happens. Okay, thank you very much for joining me, and see you next time. Bye bye.